Hey guys, it's Chris Mincolla with the Mincolla Group over at West USA Realty, and I'm doing our housing weekly market update. And I'm going to jump right in on the screen here and get started. Let me just make sure. Okay, sorry about that. I needed to check on something there. All right, so let's make sure I've got the right screen up and let's jump right in. Okay, so we came in at a core inflation rate of 3%. That's exactly what they expected. Um, and this inflation rate basically is coming in at 3%. And, the thing is, historically, inflation has been at 3.5%. Historically, that's the gauge. I think you'll see this change in the future with the new Fed. I also think you're going to see some more real-time data coming into play on inflation and jobs reports, especially on inflation rather than rearview mirror. I think you're also going to be taking a little deeper dive into the jobs numbers. But with that all said, the Fed's already behind because for them, if you get, basically 3,000 jobs, they're okay with it, which I think is very political of them because it never was in the past, and AI hasn't taken that big of a chunk of things at this point, and we're seeing people migrating over to other things. So I don't buy that. I think it's just a political thing, but that's my opinion. Anyway, we have what we have at 3%. 3.5 is the historic average, and 2% is their target. That was the number that came out of New Zealand back in the 80s and 90s. So that's what they're going with. Again, I think you'll see that change in the future. Now, we look at this again because, again, 10-year Treasury and the Fed run off these two things, other things too, but these are the two biggies. And U.S. payroll rose 178,000 in March, more than expected. Now, over 60,000 of that was the nurses coming back from their strike. Unemployment at 4.3%. So basically, as far as the numbers we have right now that could be revised more, we basically have what's considered full employment. This unemployment number gets up to 5%. And you see the weakness that has been coming in up to play, still, up to this point, come into play again. You'll see them sound the alarm bells. But until then, we're going to be just fine. As far as weekly pending sales, they slipped 70,676 across the country from 72,191 a year ago. Now, some of that I think has to do with the fact that our interest rates were way low and then they went up with this Iran war that's going on. I think we'll see, hopefully, that come to an end within the next month or two, maybe sooner, but that's me being optimistic. I think they could definitely take them out sooner rather than later if they wanted to. But we'll see how that all goes. The gas prices though went skyrocketing over $100 a barrel. Normally they're at 60. We saw them drop a little bit with the ceasefire. That doesn't look much like a ceasefire with some of the stuff going on. So we'll see how those talks go, along with the tolls that are being charged or not charged right now going through there. The big thing is getting that Strait of Hormuz open. We don't get hardly any oil from there, but we're tied in with the global markets, so we have to play that game. And that's why our gas prices are so high. But weekly pending sales, the data provides week-to-week perspective on this. So we have when we take a look at this usually takes about 30, 60 days to hit the sales data as far as the actual sales numbers when they close out. Typically, mortgage rates, it says here in Housing Wire with Logan Monashami, 6.64%, and breaking over 7% really impacted data. Under 6.25 has been a sweet spot. So with everything going on, we saw it drop a little bit. Now, I can tell you anecdotally, on our listings, when they're priced accordingly, and they present well, they go under contract right away. I had one just this last week. It was priced well, it showed well, it presented well. The seller got everything ready up front, just like we asked and talked about. And we were under contract, within, we had an offer within 3 days. We were under contract within basically 4 to 5 days. So I mean, and that's in an area right now that's considered a balanced area, not a hot area in Goodyear. So, as far as the, kind of a balanced market area for the valley. Weekly pending sales on the chart here again at 70,000. Uh, the total pending sales across the country right now at 380 as opposed to 367 from last year. So that's good. Mortgage application data. This tells the tale. Typically, it's a data point for the next 30 to 90 days. That last week we saw a year over year growth slow from 5 to 1%. Okay. So these higher rates, and not that they're higher than last year, but they are higher than they were a month ago when we had those lower rates and things really shot up. And we can see that right here on the chart. We had 5 positive week over week prints, 6 negative week to week prints, 1 flat week, 7 weeks of double digit year over year growth of people applying for home loans, and 12-week positive year over year growth. So we can see, it went up here at the beginning of the year, went down a little bit. And then when we had those lower rates come into play, when they infused the market with that 250, with $200 billion in mortgage-backed securities with Fannie and Freddie, we saw the, mortgage applications shoot right up, and now we're back down again because of the war. And you can see it, the correlation here right on the chart. So the 10-year treasury, where are we today? We're down just a hair at 4.2, not horrible. When we look at the last week, here's where we are. A lot of volatility. And over the last month, of course, we can see we're not doing too bad with everything going on and all the crazy headlines. But that should usually, the mortgage spreads have been the real tale this year. They've been much better than they were last year between the 10-year treasury and the 30-year mortgage. Right now, the 30-year is sitting right at 6.3, went down a little bit today, 6.38. And if you're working with a mortgage broker here that we work with right now, you're going to be right around that 5.3, 5.4 mark. They have ARM loans that'll be even lower than that, 5-year ARM loans. So definitely want to check into that. And when you look at the local Cromford report, they're saying with their algorithms and everything, we're in a balanced market. In a buyer's market. Below 90 is a buyer's market. Right here on the index, we're at 83. 100 being totally at balance. Supply is actually over 100 by 6 points, and demand is down by 12 points. And I think that, going into this busier time of year, that typically, our busier time of year, this last month has really slowed things down a little bit. But, when I look into the local data here in Phoenix, I'm seeing something that, because they take a whole bunch of things into factor there. The sweet spot for us is 2.5 to 3 month supply. Right now, we're sitting at 3.4 month supply. Historically, anything over a 4 month supply is usually considered a seller's market. They're calling it a buyer's market right now. I would say, once we see things, back at 3 or lower, we can definitely say we're in a seller's market. But there's a lot of other factors going on right now because mortgage rates have fluctuated so much. Home prices have gone up so much, but stayed flat over the last few years because, of the rate hikes that we had. But we're at 81 days closed on market. We've been higher than that. We've been up above 90, so that's good. Our absorption rate isn't bad, 29.08%. Average list price, 783,000. Average sales price is 635,000. List to sales price ratio across the valley is 97.23. So basically, sellers are having to reduce their price in negotiations by almost that 3% mark. Okay, pretty close to that. Actives are down a little bit, 0.1%. Pendings are down 2.3%. And closed units, and you can see that coming out of that last month when the rates were lower, closed units are coming in at 9.3%. No surprise with the rates being, across the country, in the high fives. We had rates actually in the high fours with our mortgage broker and even in the low fours with the arms. So you can see the correlation here all the way through this. Of course, the majority is under 600,000 as far as our inventory goes. We took the biggest hit at the $3 to $4 million range as far as losing units. And you can see the days on market here for each of the price points. Guys, the whole thing holding up the entire economy because the housing market really is tied into most of the economy. By the way, we don't see anything crazy with short sales, by the way, or lender-owned REOs. There's, as far as all the doom and gloom, black pillars about the housing market dying out. That's just not happening. But we are across the country in very much a balanced market. Now, if you're moving from the Northeast to the South, great time to do it because it's a buyer's market in places like Florida, places like Connecticut or up in the Northeast. You're in a seller's market. Why? You've got, like for instance, Connecticut, I know they're like 1.5 month supply. Down in Florida, you've got some areas that are like a 10-month supply. So it's crazy. You could really take advantage of that right now and get a good deal on both ends of that. Now, I'm going to jump right ahead here into our contract ratio. Basically, right now, this is telling us our contract ratio is right now at 37.8, which puts us in the warm range. So it's kind of a normal market in a lot of ways from that standpoint, what's actually active to what's actually under contract. We can see what's under contract is 7,312. Active count is 19,330. And when we look at the heat map, we can see Gilbert, Chandler, Tempe. We can see up in North Phoenix, 85024. We can see in Glendale, 85302. These are all hot areas, 85035. In Phoenix and Tullison, that's a hot area also. The super hot area right now is Glendale, 85303. 85306 in Glendale, that's a super hot area. Phoenix, 85028. So if you're in those areas and you're thinking about selling, reach out to us. We'd love to be able to talk to you about that. All the other areas are pretty much warm. There's a couple of colder areas here in central Phoenix and also in Glendale, 85301. I would like to go ahead and invite everybody to our open house in El Mirage. It's a fresh, brand new listing, remodeled, new floors, fresh paint, other updates done. Own solar. You actually, the owner actually gets a credit every month. It's amazing. But this will be Saturday and Sunday from 1 to 3 at the address right there on 129 Drive in El Mirage in Rancho El Mirage community. Great property. They have really taken pride of ownership. Original owner, really done a lot of work to the property to get it ready for sale, to make sure everything's updated for the buyer. So guys, if you have any questions at all about rates, thinking about selling, a lot of people have questions like, what is my home actually worth? What would it sell for right now, Chris? What would it take to actually move from here and move up or move down into a property that really is more conducive for our lifestyle at our current age or as our family's growing or as we're getting older, those sorts of things. If you're a first-time home buyer, what does it take to buy a home? Do I need 20% down? Can I do it with nothing down? 1%, 3%? Those are all different options, that a lot of people think you got to have 20% down. When you're selling a house, the questions are, how much is it going to cost, in my, service fees, your title fees, all that kind of stuff. And what are sellers giving up right now in your area as far as list to sales price ratio? Are they giving up concessions to buyers in your area? Those are all things that you have to kind of know ahead of time. Even if you're 6 months, a year down the road, it'd be great to meet with you and kind of talk about what maybe could do to make sure the property is going to present the best. So we're not sitting on the market. The death of real estate is sitting on the market too long. So we want to make sure that all those things are set and you're going to be priced accordingly to get the most equity and positioned right, but we don't want to be sitting there longer than we need to. So guys, if you have any questions at all, feel free to reach out. We'd love to be able to help you out. We'll talk to you next time.